For my presentation, I talked about fiscal AI in credit and fintech. So I picked fiscal AI. Well, originally I picked FinChat, but then FinChat moved over to fiscal AI when they were taken over. And so FinChat originally was like basically it was like looking at ChatGPT and you would tell them like how much money you make and like what stocks you already have and things like that. And then it would tell you like any financial advice that it had for you. But now it's Fiscal AI, which is like looking at like the New York Stock Exchange and like you're looking at like a big stock portfolio, basically. For fintech, my mom works in fintech, so I know a little bit about it. So I was like, I'll just work with that because it's something that I'm a little familiar with at least. And then I picked credit because I think credit's super interesting. My mom, I actually literally found out this morning, she also works in credit. But I thought credit was really interesting just because it's like having to do with loans and like being equitable to like everybody. So I thought that was really interesting. Um, so for my research brief, I was looking at like the initial use, and this was like all of my initial use and research on fiscal AI and just getting used to like the product. So it, like I said before, it really does look like just a stock portfolio, and I have a screenshot of the next slide. Um, and basically it's like all human oversight and like the background of fiscal AI, and basically it gets all of its information so you can look at any company that you want, and it'll give you like the little like stock things that are saying the price of the stocks going up and down, and it'll also give you like basic information on the stocks themselves. And so this is kind of what it looks like. So for my initial exploration, I got to make my own portfolio and I used Apple, Microsoft, NVIDIA, and the Saudi Arabia oil company. And so like this pie chart at the bottom kind of showed me the differences of like the companies and like the different sections that they all worked in. And then it kind of it showed me how many stocks I had in each company, how much money I spent, how much money I was making, how much money I was losing, things like that. Um, so for the strengths of Fiscal I thought they had a very clear presentation and the data was there was a lot of available data for companies and like just how many different companies there were. So like I got to see a lot of just an individual company and I also got to see like a number of companies and it would show me like similar companies to ones that I had already like quote unquote invested in. For the weaknesses, I am not a big like investor, so I'm not very used to how those things work. So it was not very beginner friendly, at least towards me. There's a lot of buttons, a lot of toggles when you first open it, so it's a little overwhelming. But after you get past that initial part, it's not that bad. And there's also no alerts, so when you start to like if the stock market for whatever reason something happened, then there would be no way for fiscal AI to alert you. So you'd have to like hope that like the New York Stock Exchange would do that for you or things like that. For my experimental investigation, I used two different frameworks on like the data that I was given by Fiscal AI. And from there, I learned a lot about personal bias, actually. So my hypothesis was that in a risk-averse framework, investors will place greater emphasis on specific credit risks or credit aspects, such as default sensitivity and liquidity stress, where in an opportunity-focused framework, they will prioritize growth and yield metrics, leading to more pro-invest credit conclusions. So for my methodology, my variables for the framework that I use, the risk adverse and the opportunity. My constant, I used the same company, I used a firm, and I used the same fiscal years. And I looked at all of the same data statistics that I show on the next slide. Uh, for the use, so then for my rubric, I had five different sections that I looked at. So I looked at like the differences between the use of credit relevant metrics, the differences between the depths of risk identification, usefulness for credit investors, bias, and clarity of conclusions. And so a five would be a very big difference, and then like one or two would be a very small difference. Um, and so basically my biggest difference was between the depth of risk identification, which basically meant that like my risk adverse identification or my risk adverse framework was very pro not investing, and my opportunity was very like pro invest and telling me that it was a good idea. So this is kind of all of the things that I looked at. So I looked at like the free cash flow margin, sales, total debt, cash flow to debt ratio, and all sorts of things like that. And so in the end, my hypothesis was correct. Um, and then for the application and design proposal, my improvement proposal was that there would be a risk adverse orientation toggle for credit investors, because for credit investors, it's really important that I mean, it's important for everyone to not lose money, but specifically for credit investors, it's very important. So a risk aversion to orientation toggle would be helpful because then it helps you focus on the things that actually would be like telling you not to invest in it, or would be like more important to not to focus on, like in terms of looking at that risk. Um, and then for the impact forecast, I thought Fiscal AI would be a very valuable tool. I think it gets rid of a lot of hours of research that investors could have, because really all of it's in one place with Fiscal AI. Uh, Although obviously it's a little hard to use at first. And also it's an AI, so you don't know how reliable that data is, even though there is human oversight. And then for my application proposal for the spring, I think Fiscal AI would be a great initial research tool. And like not much beyond that. Like I think it would be great to help you find companies and like look at basic statistics. So teams could basically like get on the website and like look at certain companies like and maybe find new ones from there. And then after that go to like somewhere like Yahoo Finance, which is a little more like reliable. So for my key takeaways, it's a very useful research tool. I think that there's a lot of AIs that are similar to it that are useful, and that personal bias really plays a role into investing, and it can really make or break an investment decision. Thank you.
Thank you. It's really great. I have a question about the platform specifically. So in one of my classes, I'm actually doing it's evaluation, and there's some things that I don't know what it means, or I need some more clarification, and I need an AI to just like explain to me in layman's terms. But would this be a platform that can do that, like more specificity, so less risk because it's more like your close finance?
I mean, you might not tell you what they do, but it'll tell you all the statistics like for a specific company. So like it could show you all sorts of things for this one company, but it doesn't tell you anything, which made it really hard to do my like experiment as well because I don't know what these things mean. So it's a good tool for like only looking at really what the company has, not like learning about the new materials and things like that.
It compiles all the data and they give more of the data, but not.
Like no explanations for any of what it is. Like it's like for something that like an investor who's like been around the block before would kind of come into and be like, "Oh yeah, like I know what this means and like this would be helpful." But if you're like a beginning investor, you're gonna look at it and be like, "I don't know what any of these things mean, but I see green and I think that's good."
Harry, if we were to use this platform in the spring term, are there any specific like terminology that you would suggest that we familiarize ourselves with so that going forward we can make the best of this platform?
Mostly what I looked at, honestly, like all of these things here, like talking about debt, net debt, like the difference between net debt, long-term debt, all of those. I still don't really get them, so I think it would definitely be helpful to like learn what those things are before we started using it. But I definitely think that it is helpful for just like basic information because there is another way that you can look at just like what the company does, who it's made by, and things like that. Like there's just like a spot that's like, this is what the company is and like a brief description.
The presentation, Jacqueline. I think it's really interesting that you chose a tool that's slightly different than all the other ones we've been looking at. I'd love to better understand how is fiscal AI monetized? Like, do specific investors you have lots of money, are they able to pay fiscal AI to provide them with more insights?
Honestly, I don't know if they can do that, but I do know that like all like hypothetical. So like if you wanted to sit there and like let's say I had a lot of money and I was just gonna start spending it there, like I could sit there and I could make like a hypothetical portfolio for myself that would be like helpful for me to know like and they also have future predictions on fiscal AI, so I could sit there and be like, well, I see that I'm gonna gain a lot more money, so that'll work.